Morning guys, Mike here, just checking in from sunny but chilly wintry Sydney right now, one of my favourite places when it comes to talking about property. I've attached to this this email the CoreLogic report. I like CoreLogic. They generally differentiate between houses and units, or detached and unit prices and what's happening there, but also they also differentiate quite well between what's happening in each capital city, whereas a lot of forecasters and those who chat and blog will talk about the property market in general, and it gets very confusing. So bear in mind each city has its own flow, its own cycle. Sydney is, as it says in that report, it's just flattening out at the moment. Some are saying it's a disaster, it's all dropping again, which again I just find funny. Sydney's just doing the end of 5 years worth of growth like it usually does in its cycles, and it's levelling out. It may actually peak up again in next quarter, but I think you'll find that prices in Sydney will be about the same now as what they would be in 5 years' time. So we'll get a fluctuation, but nothing out of the norm. And just a little chat about this particular property is at the top of my head. This particular property is at the top of my head. I'm just going to be careful because there's people around. Look, this property sold, believe it or not, in 1994 for $155,000. 23 years ago. Guess what it is now? You could market this property for about $1.1 to $1.3 million. Crazy, huh? That's what it does. Now, so for those people who are in Sydney, I've got some other photos attached to this, which is describing some properties that are, $1 to $3 million properties, and there's one there that's actually higher than that, in the same street, believe it or not. So it gives you an idea of buying a worst house in the best street. You can see this house has got rot, probably got termites. Its house is a mess, but it's not the house price that's the significant thing. It's the land prices, as we always see. So the land prices in Sydney is doing some pretty interesting things right now. But again, it's only what it's always done. Interestingly, when you look at what's happening in other states, investors-wise, it's a fantastic time to buy in Brisbane, as I've been chatting about. Melbourne is still a reasonable time to buy. It's flattening out in Melbourne as well, but with the population growth and a few other key factors of a cycle growth there's still a couple more years easily left in Melbourne's boom phase, based on history. In my opinion, but based on history, that's what it usually will do. When it comes to Sydney, if you really want to buy in Sydney, obviously stay away from the unit market, as you would, especially in Melbourne and Brisbane. But there's room for this type of property where you can buy, obviously knock a house out, put a unit on the back of it. I've got another example, which I might attach to this email as well, which is in the same street, something that happened about 8 years ago. So it's some interesting things you can do in Sydney if you want to play. If you're investing where you really want to build a portfolio, then yes, obviously chat to us about what's the best strategy for you, what type of property to buy, what city to buy in, and what's happening yield-wise as well, which is a pretty important factor, as this CoreLogic report characterises as well. So in Brisbane right now, it's a pretty amazing time for growth. It's at the beginning of a growth phase. We're still buying around $400,000 to $500,000 properties, yielding about 5%, which means for most people on a reasonable income, it's pretty cash flow neutral or positive in many cases as well. The banks are the key things, and what they're doing is just slowing down the investor market. I'm very concerned. We're doing the CEO Sleepout this Thursday night. The biggest problem we have in Australia is a housing shortage, not the overpricing of properties, but again, that's another subject. That's what we need to work on, and make sure we're providing property and rental accommodation, cheap rental accommodation for people in that lower end of the market. Not necessarily for my investors, but certainly it's something we need to work on as a nation. Anyway, that's my quick thoughts out of Sydney. I'll be chatting to you next week. See you, bye.